Here we are at the IMF World Bank annual spring meeting, and we have Shawn Baldwin, the CEO of AIA Capital. Can you tell us, you're a hedge fund manager, can you tell us more out of Chicago?
Yeah, so effectively I'm in Chicago because it's the central place, as you know, for trading, with principal exchanges between, with the recent consolidation of the Board of Trade and the CME, but you tend to have a confluence of guys who can trade exceptionally well. You've got a few of Nobel laureates came out of the University of Chicago. They've kind of focused the thinking, and you get a lot of talent still coming from the University of Chicago. So New York tends to hire away from Chicago.
Yeah.
Obviously, treasuries are still traded no longer on the floor, but through the Chicago Board of Trade, so it makes it important. And obviously, the different feel in terms of policy that comes out of DC, as well as the kind of knock-on effects that it has throughout the rest of the world, being a global reserve currency, makes this event very important.
Because Chicago is sort of becoming the capital of proprietary trading in the U.S., while New York is getting out of that.
So I would say that Chicago very much so is more centered in trading, while New York is probably better at building investment management firms. Probably the larger preponderance of the strength of trading talent still comes from Chicago, but they got to go work for new firms who tend to be a lot better at gathering assets and building domiciles. Although you still have, King Griffin and Citadel, you have Don Wilson, DRW, you have a couple other people as well that kind of make some quality at the asset management and still have kind of congregations of actual hedge funds, but Dodd-Frank has taken a lot of that back. Demo Harris and those guys. So you founded a number of proprietary groups kind of moving to Toronto.
Yeah.
It's very, very strong trading town as well, and then there's no Dodd-Frank to kind of impeach you before you can get additional.
So what exactly do you trade? You're doing microeconomic. What does that really mean? What kind of instruments are you trading?
So global macro means we can trade pretty much everything. We have a view. We have an event-driven style. So right now, since we are in what we consider to be a news-driven, policy-driven environment, that means subtle changes in policy or perceived changes in policy can affect rates and the movement of other securities by that definition. So we run a CTA as well, and we run an algorithmic group, which is ran by a bunch of University of Chicago masters, financial mathematics masters, who are not trading high frequency, but trading on an algorithmic basis. And then we still try to determine direction and size and magnitude based on how we think the market's going to react or be reflected to stated policy events.
And give us a background. Where did you grow up? Where you're from? Where did you go to school? And how did you get into the hedge fund industry?
So I'm originally from Ohio, Dayton, Ohio. I lived in New York, Chicago, and London. I went to school in the U.S. and the U.K. I went to graduate school in the U.K. I traded on the floor in London for a while. I worked from research to investment banking, and then focused on building out a hedge fund after making a deeper foray into a proprietary trading group like I used to see lots of in the 90s, which went away after Dodd-Frank because of the lack of capital. So the focus of the bulk of everything we did normally was kind of stochastics, trying to determine cheap or rich with volatility counts, and then everything comes from.
Okay, thank you. Thank you, Shawn.